Owen's had a busy morning in the last hour or so since he was last here, because a lot of data coming out today. You've broken down the key numbers, though, haven't you? Starting with GDP in Europe.
Yeah, lots of numbers coming out today, and will do throughout the day. So it's going to be a busy day in the Eurozone. Lots of GDP figures around. I've picked out a few of them for you. Perhaps the headline one is that the German economy shrank by 0.2% in the last quarter of 2011. Doesn't look quite so bad, though, when you think that the economy grew 3% overall last year, the stellar performer in the Eurozone. France, again, the economy there grew by 1.7%. That was better than many analysts expected. But compare all that with Greece, which yesterday revealed its economy had shrunk by 7% in the last quarter. Why am I throwing all these numbers at you? Because we're going to get Eurozone GDP out later this Wednesday. Lots of people will be looking to that to see, is the Eurozone about to enter a recession, even if it's a technical one. Many of these Eurozone countries have had at least one period of negative growth in the last 4 months or so, and the concern is that if they get more negative growth, we're going to get a snowball effect into a Europe-wide recession.
OK, an awful lot more earnings out as well. BNP Paribas, that's caught your eye.
Yeah, lots of the French companies reporting this week. BNP Paribas, perhaps the biggest one, its fourth quarter profit down around 50%, just 765 million euros. I've picked out a few others for you there. Lots of companies there underperforming in the earnings season. Danone, Heineken as well, its earnings just off by over 1%. Peugeot as well. Lots of talk right now about maybe Fiat making a takeover bid for Peugeot. That will no doubt be fueled by Peugeot's latest earnings, down nearly 50% to just under 600 million euros. Just while I'm talking BNP Paribas as well, a few more numbers for you. Its profits dropped, as I say. It had to write off around 570 million euros as it winds down its position on Greece. But interestingly, BNP Paribas is going to pay a dividend this quarter, €1.20 a share. I say that because Société Générale and Crédit Agricole, both of those French banks, have said they will not pay a dividend for 2011.
What's it all done for the markets then, Owen?
Yeah, given most of them a pretty good lift, actually. Yeah, the DAX leading things up around 1%. We've seen lots of those shares rebounding, as you might expect, after some fairly negative earnings. Those are the European markets for you. On the Asian markets as well, some soothing words from China's central bank governor, who's effectively said that China is ready to stand by Europe, will keep investing in Europe, and will not let the Eurozone go to the dogs, which has been good news for investors on that side of the world as well. The Nikkei finished the day around 2.5% up, back up at 6-month highs after a very strong rally.
Now, the financial situation of Greece might be stealing all the headlines, of course, but there are growing concerns about Portugal's viability. It needed a bailout of nearly 80 billion euros last year. Now, some analysts like Goldman Sachs think around 50 billion more is required. Catherine Viette has more.
Downgraded further into junk status. That's the word from ratings agency Moody's. As Portugal struggles to get its debt under control, economists say the downgrade could have negative consequences.
So the government needs to fulfill its responsibilities, its obligations, and for that the government asks for money from the public in the form of taxes and also in the form of debt. In a downgrade like that, makes it much more difficult for the government to finance itself.
While Spain and Italy have seen their borrowing costs drop, it remains a question mark as to whether Portugal will fare as well. The big concern is that austerity measures are slowing down growth. When Lisbon received a €78 billion bailout from the EU and IMF last May, the ratio of its debt to GDP was 107%. By next year, it's expected to reach 118%. This despite the fact the government has pushed through cuts in spending, wages, and pensions, as well as increasing taxes. These moves have left many in Portugal grumbling.
The government takes money away from pensioners, away from all of us, so that the debt is paid. At the end of the day, it's us who are paying the debt.
Portugal's economy shrank by 1.5% in 2011 and is expected to contract by 3% in 2012, making it more likely that Portugal will need to seek more funds from the IMF and the EU.
A few more of the top day's business stories now then, and China has agreed to open up its lucrative vehicle insurance market to foreign competitors. The agreement was included in a number of bilateral trade pledges during the Chinese Vice President Xi Jinping's visit to the US. The deal expected to trigger a scramble for business among insurance providers as they seek to cash in on the world's biggest car market.
And Apple is in active discussions about what to do with its growing multi-billion cash reserves. That's according to CEO Tim Cook. The iPad manufacturer has been under investor pressure to return nearly $100 billion to shareholders through a one-off dividend. Cook spoke as Apple faces a selling ban in China in a new copyright dispute with a Chinese technology firm. You did hear right, $100 billion. I'd say give it to Stuart for his holidays.
I'll have it. Just for you.
Or give it to Greece. You could bail out Greece with that money quite easily.
No, I'll have it. Now next, we're cashing in on the Facebook effect. Talking of money, the US property market story in recent years been best summed up in one word: it's foreclosure. Not so though in Silicon Valley. Real estate prices are booming, fueled by the explosive growth of companies like Google and Facebook.
This house has a listing price of $1.8 million. But in Palo Alto, in the heart of Silicon Valley, this price tag is no barrier. Realtor Ken de Leon is expecting around 10 offers, most bidding at least $20,000 above the asking price.
Everywhere else you have foreclosures and declines. Here you have multiple offers, some homes going several $100,000 above list price, and many more buyers than you have sellers.
The tech boom is back in California, along with rising prices. The average house sold in Palo Alto goes for nearly $2 million. And real estate values are set to rise even more this year by at least 10%. The reason? Facebook, for one. Its initial public offering, announced earlier this month, could value the company at more than $100 billion. Many of the company's employees will become instant millionaires, half a dozen billionaires. But in an already overcrowded market, there just aren't enough houses to go around.
They're going to triple their head count. Those additional 5,000 or 6,000 people are going to want to buy into the desirable communities, and that's what's going to push prices up.
That means even more business for realtors like De Leon. At a recent viewing, more than 100 people turned up in just 3 hours. And that pace isn't likely to slow down soon, as long as tech companies continue to call Silicon Valley home.
$200 million.
I'll have it. I'll take it home, back pocket, you'll never notice.
Talking about Facebook, though, one thing Mark Zuckerberg will have to contend with when Facebook does float, we're expecting that, remember, in the spring, is a $5 billion tax bill as a result of that flotation. But I think you can afford it, don't you?
I think you probably can. Even if either of us gets the money, we'll still be here every morning to bring you the news on France 24. Owen, thanks very much. That's just about it from us. Claire's got the latest after the break. She's not got the cash, has she?